Okay, Dhirendra Kumar also joining us this morning. Dhirendra, what's your view? Do you feel that the broader underperformance is over?
I don't know. The fact is that smaller companies get beaten down much more in a rough economic condition, and they are also more vulnerable. I think but they have a very limited case. Most investors can do without a focused portfolio of small companies and mid-sized companies. Also, given the context we are in, the steep decline, the grim outlook, most of the big turnarounds in the market they are normally led by the large caps, and that we have seen. Even our market, even before this big decline that happened in the month of March, we saw that our market was very narrowly driven, and it was basically what Jayesh was saying about the broader market on the Nifty. But even within Nifty, it was led by three, four companies. Of the companies, five companies actually drove that performance. Rest of them were laggards. So in that sense, if we see a turnaround, it will be led by large caps, and most investors investing in mutual fund for a variety of reasons, for convenience, for partner, owning equity, for the decline in the fixed income rate. I think they can do without investing in most new investors should completely avoid small caps and mid caps. Even investors who have been around for a while, it could be disappointing, because one thing is to say that I can withstand the risk, I can withstand the decline for sake of higher return in the long term. But when you are faced with that big decline, what happened in all these, the good funds, the good mid and small cap fund, they were on a free fall, 20% decline in a week's time in the month of March. All the big, the highest weekly decline in these funds were registered then. And even though their long-term performance is compelling, 13-14% return since their launch in a period of 8-9 years or 7-8 years, despite that. So it is meant for very limited number of people who understand what it is, who have figured it out, and they have the experience. Otherwise, most investors can do without them.
Dhirendra, you understand the power of cycles and mean reversion much more than anyone else. The votaries of small and mid-cap stocks would say that, look, in last 10-15 years, every time if you bought small and mid-cap stocks at the peak of pessimism, after 2 or 3 years of underperformance, the next 4 or 5 years, you tend to flourish. And there are examples, 2013, 2004. What would you say to the votaries who are insisting that small cap stocks are cheap, they have underperformed, and the mean reversion will happen from large cap stocks?
No, it will definitely happen, but for that it requires patience. Mostly, we have seen, and it is evident if you look at the oldest mid cap fund, which is Franklin Prima. Look at that long term return. It was launched in 1993. And the returns will be in the region of 12 to 14%, which is very significant. Even the direct plan, which was initiated in 2013, despite all the ups and downs, it is 13.45% since the start, 1st of January 2013. So this is phenomenal. If you look at what the fixed income return has been, despite all the declines, and this is at half the value from where it was in somewhere in the middle of last year. So in that sense, they have a compelling case. But what I'm saying is that the kind of experience they provide to individual investors for whom mutual funds are meant, they are not worth their while, because they run experiencing small cap fund, you run the risk of driven out of the market at a very inopportune time. Definitely, cyclicality prevails. The reward for staying the course is huge. And in fact, for anybody, all the trailing return that we see in small and mid cap fund, they are not representative for SIP returns. In fact, because these funds do very poorly for a prolonged period of time, and they do very well over a narrow time band when the market is getting heated up, and we see the kind of multiples, or the big leg up that happens in small and mid cap funds. They turn out to be, they give outsized return for those investors. So these can be hugely rewarding for patient investors who understand and who don't run away at the most inopportune time.
Dhirendra, so can I say that investing in small and mid cap stocks is more like a bull market product? You should only invest in small and mid cap stocks when economy is expanding, when things are looking up, when there is boom time, not when there is a crisis. You may optically find these stocks cheap, but typically small and mid cap stocks don't do well when the economic outlook for next 12 to 18 months or 12 to 24 months is bad.
Yeah, but it is very difficult to perfectly time it, and most markets turnaround happen when you least expect it. So it is very difficult to do it precisely. So one should actually, keep investing through the lean times and maybe, realize from these in good times. And that will happen in a cycle of, 4 to 5 years. Our own basic, iteration of numbers on small cap funds and small cap indices was that on a 7 year holding period or on a 7 year SIP, you end up making substantially more than large cap, mid cap, fixed income inflation in a small cap fund. So do investors have that patience to rule out the possibility of getting disappointed with small caps? If you don't have that 7 year time frame, also, I think small cap funds add significant value because the kind of portfolio you end up owning in a small cap fund is very different from if you go about dabbling in small cap stocks yourself. You will end up speculating and getting into kind of stocks which will end up being nowhere or untraded or unlisted and getting phased out. So I think small cap funds have also, the fund manager has a significant role to play. You can by and large, the band of performance in large cap fund is very narrow. But in case of small cap fund, the differential could be huge. So there is a premium for choosing a good small cap fund and sticking the course or staying the course through the whole market cycle.
Right. Dhirendra, assuming you've got someone who's a little brave-hearted and a racy and pacey investor, and the other one who's a conservative investor, for the next 5 years, what should be the allocation across categories? That's, your large cap, multi-cap, as well as small cap funds. What should be the percentage allocation?
In fact, I would like to add one more dimension because investors' behavior is paramount when it comes to experiencing equity. So if you have never invested and you're getting tempted and simply because the fixed income rates have come down so dramatically, then start with a balanced fund. That should be your thing, and for next 5 years, and never invest lump sum. Any of these funds, never invest lump sum. Even if you have lump sum money, if you have a sizable money, don't invest at one go at any cost. Then comes somebody who has little experience. Do without any of these small caps, mid caps, multi caps will get you a reasonable benefit without the heartburn. And if at all, if you have this experience, if you have been in the market through mutual fund, doing your SIP, you have been able to reconcile yourself with the ups and downs, and you don't get upset and you don't lose your sleep anymore, then by all means, allocate some money, maybe 30%, 40%, 50% in small and mid caps. But have that 7 year time frame and only do SIP. So I would say that, first time investor, balanced fund, next set of investors, some experience, multi-caps, very experienced investors, understands it, won't cry, go for small and mid caps.
Now then, Dhirendra, to further help our viewers, which funds in these categories would you actually recommend?
Okay, balanced funds I like quite a few, but just to be selective from my stuff. One second, Aisha. But among the mid caps, what I like is Axis Mid Cap, Kotak Emerging Equity, and Franklin Prima. Among small caps, SBI Small Cap, Franklin Smaller Companies, HDFC Small Cap, and among multi caps, this is a very select list from a very large universe, which is SBI Focused Equity, Axis Focused 25, and Mirae Asset Emerging Blue Chip, Parag Parikh Long Term Equity, and Kotak Standard Multicap.
Dhirendra, great to have you on the show as always, and actually calling it out there that small caps are not for the beginners or the faint-hearted. Only if you have a really long time frame of 7 years should you be looking at that category, because when the market recovers, it's going to be the large caps which are going to be sought after. Oh yes, and always choose the SIP route. That is something that we always propagate at ET Now. Never put your money lump sum, be whatever category.